Oil futures crash. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee, and I thought we'd have a look at this article from news.com.au discussing oil futures because, well, something very interesting has happened. If we jump over here to trading economics, we can see WTI oil futures expiring Tuesday turned negative for the first time in history on Monday, ending the day at minus 37.63 a barrel, as the illness pandemic erases demand for fuel and any buyers were willing to take delivery of crude because there's no place to store it. Global oil consumption is estimated to have fallen by 30% amid stay-at-home restrictions and business closures due to the outbreak. So there you go. I mean, look at it now. Oh, it's only at negative $2.93 at the moment. So people are buying up the paper contracts. But what are we talking about here? The WTI. These are the WTI crude futures. So the ICE West Texas Intermediate WTI light sweet crude oil futures contract offers participants the opportunity to trade one of the world's most liquid oil commodities in an electronic marketplace. So again, it's a digital version of reality, but it's still a historic moment. What's this going to do to all of the oil industry in the States or around the world? The contract not only brings the benefits of electronic trading in US light sweet crude maker, but also brings together the world's three most significant oil benchmarks on a single exchange: Brent, Middle, East Sour Crude, and WTI. This offers a reduction in collateral requirements through the offsetting of margins. So let's just quickly jump here to look at what a future is, in case people don't know. So futures, and this is from Investopedia, guys. What a great website and a great reference I jumped to just to help people and myself understand all of these things. So futures are derivative financial contracts that oblige the parties to transact an asset at a predetermined future date and price. Here, the buyer must purchase or the seller must sell the underlying asset at the set price regardless of the current marketplace at the expiration date. Underlying assets include physical commodities or other financial instruments. Future contracts detail the quantity of the underlying asset and are standardized to facilitate trade on a futures exchange. Futures can be used for hedging or trade speculations. So the key takeaways: futures are financial contracts obliging the buyer to purchase an asset or the seller to sell an asset and have a predetermined future date and price. A future contract allows an investor to speculate on the direction of a security, commodity, or a financial instrument. Futures are used to hedge the price movement of the underlying asset to help prevent losses from unfavorable price changes. So I'll link to this if you want to go through it in any greater detail. But what does this fall below zero, and it's still sitting below zero, what does this tell us about confidence in the future or demand for oil in the future? Or maybe, all the good news that's coming in other parts of the market. I mean, we'll have a look here. Nikkei is down, Nasdaq is down, Dow Jones is down, S&P 500 is down, ASX 200 down. Look at our currencies. We're still at 63 US cents. So the US is appreciating somehow. Great Pound, 122. The euro. Let's have a look at some other commodities. Gold is up to 16.91 again. So I think that's an indicator for future economic activity, perhaps, the oil futures. So let's have a look at this article, everyone. Oil prices plunged below zero amid a pandemic panic. So oil futures plunged below zero for the first time on Monday as demand for energy collapses amid the illness pandemic, and traders sought to avoid owning crude with nowhere to store it. Stocks were also slipping on Wall Street in afternoon trade, with the S&P 500 down 1.2%, but the market's most dramatic action by far was in oil, where benchmark US crude for May delivery plummeted to negative 37.63. It was nearly $60 at the start of the year before business shutdown orders swept the world and idled factories, offices, and automobiles. Much of the drop was chalked up to technical reasons. The May delivery contract is close to expiring, so its trading volume was light, which can exacerbate swings. But prices for deliveries even further into the future, which were seeing larger trading volumes, also plunged. Demand for oil has collapsed so much that facilities for storing crude are nearly full. And that's a key takeaway there, isn't it? Tanks could hit their limit within 3 weeks, according to Chris Midley, head of analytics at S&P Global Platts. And traders are willing to pay someone else to take that oil for delivery in May and shift the burden of figuring out where to keep it. Benchmark US crude for June delivery, which shows a more normal price, fell 16.3% to $20.90 a barrel, so that's probably more realistic. Big oil producers have announced cutbacks in production in hopes of better balancing supplies with demand, but many analysts say it's not enough. Basically, bears are out for blood, says analyst Naeem Aslam of Avatrade. The steep fall in the price is because of the lack of sufficient demand and lack of storage place, given the fact that production cuts has failed to address the supply glut. Halliburton swung between gains and sharp losses, even though it's reported stronger results for the first 3 months of 2020 than analysts expected. The oil field engineering company said that the pandemic has created so much turmoil in the industry that it cannot reasonably estimate how long the hit will last. It expects a further decline in revenue and profitability for the rest of 2020, particularly in North America. So what's going to happen with the oil production in North America? My understanding was a lot of their production isn't as profitable at certain rates. Now, if we're seeing this happen in oil, as Australians, we need to worry about two other resources. And that's iron ore and coal. Because they're two of our major exports. I mean, look at that. Coal, $58. That's going down as well, guys. They're two of our major exports. And the government revenue and budget is dependent on a certain price for iron ore. Brent crude, the international standard, was down $2.46 to $25.62 per barrel. In the stock market, the mild drops ate into some of the big gains made since late March, driven lately by investors looking ahead to parts of the economy possibly reopening as infections level off in hard-hit areas. Pessimists have called the rally overdone, pointing to the severe economic pain sweeping the world and continued uncertainty about how long it will last. Well, yeah, that's the thing. It's very uncertain how long this is all going to last, isn't it? We're hearing different mixed messages all over the place. And also, I mean, could the market just be responding to the quantitative easing and the buying that's happening from the reserve banks around the world? The Dow Jones Industrial Average was down 444 points, or 1.9% to 23,797. Nasdaq was down 0.4%. Energy stocks took the sharpest loss, with those in the S&P 500 down 3.7%, but the losses were widespread, with all 11 sectors in the index down. The government can declare whatever they want in terms of encouraging people to get out and do stuff, said Willie Delwich, investment strategy at Barrett. Whether or not broad swathes of society do that remains to be seen. It's going to take seeing people start to go out and do stuff again. That will be the necessary positive development, not just declaring, getting things open. And another thing, habits will change. I am confident that people's habits will change. I think a lot of people will realize how much money they've wasted on all these frivolous purchases if they're stuck at home having to cook themselves. I hope everyone's not just depending on Uber Eats and takeaway. You know, maybe this will be their never again moment. they're having to depend on the state to keep them afloat. Maybe they'll realize it's time to get some money put aside. Get that emergency fund. So more gains from companies that are winners in the new stay-at-home economy help limit the market losses. Amazon rose 1.7%, Netflix jumped 4% as people shut in their home buy staples and look to fill their time. Both were close to setting record highs. In Tokyo, the Nikkei 225 fell 1.1% after Japan reported that its exports fell nearly 12% in March from a year earlier as the pandemic hammered demand in its two biggest markets, the US and China. The Hang Seng Index in Hong Kong lost 0.2%. South Korea Kospi fell 0.8%. European markets were modestly hit. German DAX was 0.5%. French CAC 40 was up 0.7%. FTSE 100 in London gained 0.7%. In a sign of the continued caution in the market, Treasury yields remained extremely low. The yield on the 10-year Treasury slipped to 0.62% from 0.65% late Friday. It started the year at nearly 1.9%. Bond yields drop when their prices rise, and investors tend to buy treasuries when they're worried about the economy. Well, what does a move from 1.9% to 0.62% tell us? Hey, at least they're not negative, guys. At least they're not negative. Stocks have been on a generally upward swing recently. Well, okay, but let's have a look, guys. We'll jump to this. S&P 500. We'll have a look here. They have been. Are we gonna? Is this a recovery or is this the dead cat bounce? What's driving the recovery? We're going to see more forecasts coming from more businesses get in trouble. Maybe hope. So, promises of massive aid for the economy and markets by the Federal Reserve and US government ignited the rally, which sent the S&P 500 up as much as 28.5% since the low in March. More recently, countries around the world have tentatively eased up on business shutdown restrictions put in place to slow the spread of the virus. But health experts warn the pandemic is far from over and new flare-ups could ignite if governments rush to allow normal life to return prematurely. I suspect this is what's going to happen. I suspect regardless of what we're going to do, well, we're not going to have as much immunity to it. Maybe we will. This is what I'm worried about, how the market will react if we get a flare-up. It may go crazy. The S&P 500 remains about 15% below its record high in February as millions more US workers filed for unemployment every week amid the shutdowns. Many analysts also warn that a significant part of the recent recovery in stocks is due to the expectation among some investors that the economy will rebound sharply after or once economic quarantines are lifted. They're essentially predicting that a line chart of the economy will ultimately resemble the letter V, with a wild ride down, but then a quick pivot to a vigorous recovery. That may be optimistic. We caution that a U-shaped recovery is also quite likely. While the economy bottoms out and stays at the low level for a while before recovering, strategists at Barclay warned in a recent report. Without strong testing programs for the illness, businesses likely won't feel comfortable bringing back their full workforce for a while. With risk assets now overbought, the chance for a correction has increased, Morgan Stanley strategists wrote in a report. So there you go, guys. There you go. Oil futures go into negative. It's historic, guys. Still now, $4.80 at this moment. What do you think that says for the confidence for the future of the economy? We'll have to wait and see. Let's hope coal and iron ore doesn't plunge as well. That's going to have a big dent on the Australian economy. As always, please let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or on Patreon. You can support us via our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. You can buy our merch from Teespring or HeiseSays blog. You can send us gold using Gold Pass, and you can support us via PayPal. Thanks, everyone. Have a great day. I'll see you next time.